Hey family, how are you doing today? Today is the 19th day on my journey of getting a HELOC, HELOAN, or all-in-one mortgage. Got some fascinating news about a new strategy that I hope to implement in terms of getting this particular product. Before we get started, hit the like button, hit the subscribe button so you get alerted when new things come out. Well, one of my viewers saying, "Hey, Dr. Green, you seem like you run a lot of experiments and you're running experiments for the community." So I like to say that I am an experimental political economist. I'm not a CPA and I'm not an attorney. I'm just a gentleman. I'm just a doctor running experiment, particularly financial experiments for the community with my own resources. And this particular one is getting a HELOAN, a HELOC, or all-in-one mortgage. And thank you for being on this journey. Well, let's go ahead and get started. And just going to do a little bit of recap from yesterday and throw in the new issue that I found. So today, what we have, let me go with a full screen. Okay, so welcome to day 19. What we're going to look at today is pay your mortgage with a HELOC, a HELOAN, velocity banking, all-in-one mortgage with a credit card. So I've heard some things on the internet that you can use your credit card to pay your mortgage. And by using your credit card, I'm assuming you can get more points. You can get more benefits because you're putting a lot more money on and you're paying it off. So I'm like, okay, let me look at trying this particular strategy. So I'd like to welcome everybody today. Three major items we'll do look at today is the credit card, using another a consumer credit card, or paying your mortgage with a business credit card. Because I have property management companies, consultant management companies. So I was thinking about also to use a regular consumer card. What about a business card also? So what is financial capability? So you heard about a lot about financial literacy, and that's increasing your knowledge. But I've also started looking at financial capability. And financial capability moves a little further step beyond financial literacy and also encompasses your environment and other aspects of the things that you experience. So for me, financial capability is capacity to use your behavior, attitude, skills, and knowledge within your environment or access to manage money equitably, and effectively at all levels of your life. And that's saying that you just want to help other people also. I want to help you. I want to help my family. I want to help different communities. I want to help other people to do more. So going beyond just financial literacy, I'm looking at financial capability. So, in looking at paying your mortgage with a credit card, some people have said that you can link your mortgage to your credit card, but you can kind of seem like overdraft the checking account that you use, and then your credit card would automatically sweep it over or pay the card. So let's say, for instance, I have $200 in the bank and my mortgage is $500. Now, the 200 in the bank is not going to cover it. So it's like there's a mechanism in place. So if it doesn't hit this, then it's going to hit another, but you got to set it up in your account. So I tried this system by calling Bank of America and seeing how can I set this system up in place it's called overdraft protection in general. So that's what I'm trying to use so that when the account is not enough to cover a mortgage, then it'll pull automatically from a credit card. So in this instance, you can see that here I have a checking account that has $544 in it. I have a mortgage that's 647. So when that 647 comes in to this account, and I set this up today, so I moved it away from one of my other accounts and placed it into this account. So on my mortgage. So now when the mortgage comes in to this particular account and I attempt to pay it, and it does not have enough, which is short $140, it's going to pull from the signature credit card that I have on file, and then it's going to give me points. Oh, wow. I can't wait. I'm going to use those points probably to travel, dine out, give to my community, do just super things with those points. However, there is a caveat. There are a couple of caveats. So I called Bank of America, and what Bank of America seems to indicate on this advanced plus banking, when that overcharges $147, they're going to charge me $10 overdraft fee. In addition to that, when it comes over to the Visa cash card, I'm going to get charged 0.03% on that $147 because I think they're seeing it as a cash advance. But at the same time, I'm getting points. So I think it's 1 point for every $100. Oh, I'm sorry. I think I get 1.5% on all purchases. So it's either that $147 or the entire mortgage purchase will give me 1.5% cash back. So I have to go in and calculate it and see if it's worth it. Is the $10 fee on top of the credit card worth it that I'm being charged for the checking account plus the 0.03% that's going to be charged to the credit card worth the 1.5% benefits that I'm receiving? Now, I think one of the other caveats that they talk about is that I think I'm still in the period where I'm charged 0% interest, possibly on the card itself. So I'm gonna look into further into that and give you some more updates. But again, that's what I saw today. Looking online at using a credit card to pay your mortgage and get the benefits. In my case, 1.5% back. Now, we talked earlier about what is home equity, and that's the difference between what I owe and the value of my home. The home that I'm running with, I purchased for $57,900, is valued at 219, I think, by the credit union. So I have enough equity in it that I can pull out, and we're working on that, and we're on day 19. What is the home equity continued? These are just some of the benefits that we already talked about in the previous a previous video. So we skip that. We talked about a home line of credit. It's just a equity is like used as a credit card. So here, as a home equity line of credit, they give you maybe $100,000. I'm looking at trying to get that. That's sitting in the account, and then I can use that like a credit card to pay off my bills, pay charges. Now I may get a debit card with that account, but I'll have to see. But the home equity line of credit is kind of like a credit card, and it's secured by the equity in the home, which is kind of a funny thing in a sense of, so here's this equity between what you owe and what you spend is there now, but if the value of the property decrease, is gone. So why are they willing to give you the resources for it? But it is, again, a debt tool, and we need to be aware of that. Again, the property is appraised at 218. I purchased it for 60,000. It's the $28,000 property now. 15 years remaining. We talked about a credit score before, factors in a credit score. Today when I went into Bank of America and looking around, now here is some similarity. So for the Discover card, they also use TransUnion FICA 8, and also Bank of America use FICA 8. So that's good that those two are in a line. But as I talked about yesterday, you can have multiple credit scores all over the place. And the consumer, although we want to be well educated, we don't know where the mortgage score is that they use when they calculate if you can get a mortgage. So that's kind of disappointing. So you know your credit score and you can try to improve your credit score. But when I started this journey and I asked, okay, well, where is the mortgage credit score? Are you using the consumer? No, sir. We use a mortgage score, or we may use a tri-merge. A tri-merge is the merging of multiple credit bureaus, and they take the middle one. But some companies run a mortgage score. So there's a lot of different models out there. So it's a little difficult for the average consumer. This was the Vantage score on another one, the FICO score 9. So what is the next steps? The next steps we're prepare for is I should have been day 20. I'm gonna continue are waiting for the loan to come through, hopefully soon. Continue to develop my understanding of a HELOAN, HELOC, all in one, these different types of debt instruments, and try to bring them to the community. As a experimental political economist, I hope to experiment with these things, see how they operate, and bring the real data to you. And you can ask about my experience, and we can have some real world versus just talking about it and not really experimenting with it. I want to be able to be as educated as I can about the products that I'm talking to my clients about and to you about. Again, this is if you want to work with me or if you want to improve your credit, we can pay off some of your debt. And then we can write up a payment schedule in general, but it's going to help improve your credit, help improve your numbers. My first client that I worked with, I helped him improve his credit, and he got nearly 100 points in about 2 months. So yeah, it can be done, and I'm here to help you in any way possible. Again, this is Dr. Experimental Willie Green. I am a experimental political economist. I'm not a CPA. I'm not an attorney. I'm not a financial planner. I'm just a professional trying to use his experience to educate the community. Thank you very much for stopping in, and y'all have a blessed day.